Hiren Ved, Director and CEO of Alchemy Capital Management, joins us right now on the phone line. Hiren, so good of you to take time out and speak to us. Your thoughts, Hiren? This has come in at a time when a lot of question marks about how the economy is very sluggish, so on and so forth. But earnings growth necessarily not be at the mercy of economy, right?
Yeah. Hi. Good morning, Nilesh. I think, it's actually very difficult to correlate one-to-one, in terms of how GDP growth or the economy is doing in the stock market in the short to medium term, right? Because one of the dichotomies is that when the economy is not doing well, interest rates are low and liquidity is ample. And, we also have a context where global liquidity is ample and domestic liquidity is ample, and that is, typically driving markets. And if you go back in history for the last 30 years, you will see that every time we've had an extremely tough macroeconomic year, the subsequent year has been, a very good year for equity returns, right? If you look at 91 was a very tough year, 92 was great. I mean, if you look at 2008 was a tough year, 2009 was great for markets. 2013 was tough for the macroeconomy, 2014 was great. So I think if you look at it, I mean, if you take the 1 year period starting from when the IL&FS crisis hit us, which was August, September 2018, and then from there to August, September 2019 has been a very, very tough year just before the tax cuts. I think now, we've seen the kind of worst of the macroeconomy and growth, and the markets tend to look ahead, not behind. And I think the fact that the Nifty has hit a new high tells you that the economic recovery will happen over time, but the markets will tend to discount it well in advance.
Yeah, I think the markets typically tend to look at you right, and maybe the market always knows something that most people don't quite know. Hiren, so let's leave this conversation about when the economy will recover. The question is, the markets have had new highs on the expectations of a few micro and a few macro events turning right. What's the big kicker for markets going ahead? Would it have to be earnings growth, or would normalcy in earnings and not necessarily blowout performance, but other factors falling in place work?
See, I think if you observe over the last couple of months, what I've been seeing is that each of the sectors that was stressed or not doing well is bottoming out in the stock market, right? I mean, you look at NBFCs, right? Most of the stocks are off their lows. You look at telecom, I mean, a very stressed sector, it's off its lows. Look at public sector banks. After the Supreme Court judgment on SR Steel, they are off, the bottom. Look at real estate; they are off the bottom. So I think what we are seeing is that one by one, many of the stress sectors of the economy are off their bottoms, and that's how typically a bottom formation happens. It doesn't happen overnight; it's a process. I think as far as the trigger is concerned, earnings, will come through. I think there is an expectation that the breadth of the economy will improve. But I think the immediate trigger is that many of the stress sectors, there is either policy initiative or there are factors that are falling into place, which is bottoming out each of these stress sectors. So I think there is a little bit of a mean reversion which will start to play out, where the broader markets will start to breathe some more life compared to the narrow movement that we have seen. And obviously, I think, the leaders of the pack will still continue to be, the high quality names. But simultaneously, you will see some kind of a bottom formation happening in the broader markets as well.
So, Hiren, good morning to you. And one last question on this conversation. What does 2020, according to you, look like? I mean, at the start of the year, you will have the budget, and expectations are with regards to some meaningful announcements in the budget as well. But does 2020 look like a year where, we've left the issues in the past, or do we carry the burden of sluggish growth with us in 2020?
I mean, my answer is twofold. I think from a stock market perspective, I expect 2020 to be a significantly better year than what we've seen in the past. As far as the economy is concerned, I think we should see a slow but a painful and slow, steady recovery in the economy. Because the liquidity needs to percolate down to the broader economy, and that will take time, right? But I think some of those conditions are in play, but it is going to be a very painful recovery. But as I said, let's not equate economic recovery to stock market performance. I think the stock market tends to discount the future. So if you're asking me how 2020 will be, I think for the markets, it will be phenomenal. For the economy, it will be a slow process of recovery.